It is now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. David, welcome back.
Thank you, Rhetoric. Appreciate it.
Absolutely. So the stock market doesn't really seem to have gone much of anywhere for the past month or so after that wild year it had in 2020. What do you make of this?
Yeah, it's kind of weird, isn't it? Last year, 2020, things were pretty violent both directions, but clearly finished the year up significantly. The Dow, which again is kind of the proxy a lot of people look to, that was north of 10% last year. However, the NASDAQ, which is more technology, that was north of 20% as far as last year. And so coming off of that type of move, this year seems kind of lame. In reality, it's been a decent year as far as start to the year. Generally speaking, you're not getting mid double digits, you're getting high single digit type returns. Now the volatility, as I discussed last week, has come down. We are getting used to 1% and 2% moves daily. That's very unusual as far as for the market. So we're, I think, going to settle into lower levels with this the canal issue as far as with the boat blocking the world economy. This is significant, but I think it's a one-off type event. We just had yesterday, literally yesterday, a blow up as far as of a hedge fund. So that's going to create some short-term volatility. But as a whole, things have calmed down pretty significantly as far as over last probably month or so.
So is this tug of war dynamic unusual in markets?
So the big thing as far as when we look at, I brought along a chart, Rhetoric, and this chart is a great visual, and I'll try to, again, simplify as best I can for folks, is that you've got primarily what are called growth stocks, which I guess I'll generalize and say is technology to try to simplify things. And then you've got other, which would be energy, financial companies, consumer staples, that type of stuff. And we'll call that stuff value. And generally speaking, what historically has taken place and what this visual is showing is that when you've had one up, the other's been down. And that's really rare, Rhetoric. Generally speaking, when you have markets moving up, maybe you'll have technology moving up 1% for the day, and then the other stocks will be up 0.25% for the day. But this year, what we've experienced, and in particular over the last month, give or take, is this rotation that's taking place. And the rotation has basically led to, if growth stocks are up for the day, value stocks are typically down. And again, that's just really unusual. So as the chart's showing here, 6 out of the last 10 days, that's the extremes that we've had. Again, very unusual events.
We appreciate your knowledge as always, David. Thanks for being with us.
Thank you, Rhetoric.
And if you missed any part of our discussion, we will have it for you online at ourquadcities.com.